What if I told you that you could lose more trades than you win and still be profitable? Sounds impossible, right? Well, that's the power of understanding risk-to-reward ratios. Welcome back to the channel. Today, we're diving deep into one of the most critical concepts in trading, the risk-to-reward ratio. We'll break down the three most popular ratios, 1-to-1, 1-to-2, and 1-to-3, and by the end of this video, you'll know exactly which one fits your trading style. But here's the twist. The best ratio might not be what you think. So stick around because we're going to challenge some common assumptions and show you the math that could transform your trading account. Before we compare ratios, let's make sure we're all on the same page about what risk to reward actually means. The risk to reward ratio is simply the relationship between how much you're willing to lose on a trade versus how much you aim to gain. Here's the formula. Risk to reward equals your potential profit divided by your potential loss. Now, why does this matter so much? Because your risk to reward ratio directly determines what win rate you need to be profitable. With a 1-to-1 ratio, you need to win more than 50% of your trades to profit. With a 1-to-2 ratio, you only need to win about 33%. With a 1-to-3 ratio, you only need to win 25%. This is powerful stuff. But before you rush to use a 1-to-3 ratio thinking it's a free lunch, there's a catch. And that's exactly what we're going to explore. Let's start with the 1-to-1 ratio. This is where you risk $1 to make $1. Equal risk, equal reward. At first glance, this might seem like the worst option. After all, you need to win more than 50% of your trades just to break even. But here's what makes the 1-to-1 ratio interesting. Advantages. Number 1, higher win rates. Because your profit target is closer to your entry, you're more likely to hit it. Markets are choppy and price often moves just a little bit before reversing. A 1-to-1 ratio capitalizes on these smaller moves. Number 2, psychological confidence. Winning more frequently, even with smaller gains, builds confidence and helps you stick to your trading plan. There's real value in that. Number 3, faster feedback. Trades hit their targets quicker, meaning you can take more trades and learn faster. The 1-to-1 ratio works exceptionally well for scalping strategies, range-bound markets, high-frequency trading approaches, beginners building confidence. Disadvantages. But here's the downside. You must maintain a win rate above 50%, preferably 55 to 60% after accounting for commissions and slippage. That's harder than it sounds. You're also more vulnerable to losing streaks wiping out your gains. 5 losses in a row mean you need 6 wins just to get back to break even. That's a grind. Now we're getting to what many professional traders consider the sweet spot, the 1-to-2 risk to reward ratio. With 1-to-2, you're risking $1 to make $2. This is widely considered the most balanced approach to trading. Let me show you why. The math. At a 1-to-2 ratio, you only need to win 34% of your trades to break even. But realistically, with commissions, you want to target around 40 to 45% win rate to be consistently profitable. This is achievable, very achievable. And here's why the 1-to-2 ratio is so popular. Advantages. 1, forgiving win rate. You can be wrong more often than you're right and still make money. That's real pressure. 2, reward for patience. The 1-to-2 ratio forces you to let your winners run a bit longer, which is exactly what profitable traders do. 3, better risk management. Even a string of losses doesn't devastate your account. Lose 3 trades, 1 good winner gets you more than halfway back. The 1-to-2 ratio excels in trend-following strategies, swing trading, breakout trading markets with clear directional bias, the reality check. But here's what you need to understand. To get that 2-to-1 reward, price needs to move twice as far in your favor as your stop loss. In choppy markets, that's tough. You'll see price get close to your target, then reverse and stop you out. Studies show that when traders switch from 1 to 1 to 1 to 2, their win rate typically drops from around 55% to about 40 to 45%. That's natural, you're asking price to move further. Real example, 100 trades, 1 to 2 ratio, $100, risk per trade. Win 43 trades equals $8,600 profit, 43 times $200. Lose 57 trades equals minus $5,700 loss, 57 times $100. Net profit equals $2,900. That's a 29% return on total risk with only a 43% win rate. See the power? This is why professionals love the 1 to 2 ratio. It gives you room to breathe. You don't have to be perfect, you just have to be selective and patient. Now let's talk about the 1 to 3 ratio, where you risk $1 to make $3. This sounds incredible, right? You only need to win 25% of your trades to break even. But here's where we need to get real about the trade-offs. The dream. When a 1 to 3 trade works, it's beautiful. One winner can erase 3 losers and still put you in profit. For traders who can identify strong trends early, this ratio is phenomenal. Advantages: 1. Maximum profit per winner. Your successful trades make significant money. 2. Extreme forgiveness. You can have a 30% win rate and be very profitable. 3. Perfect for trend catching. When you catch a major move, 1 to 3 lets you ride it properly. The reality. But here's what nobody tells you about 1 to 3 ratios. 1. Your win rate will plummet. Expect 25 to 35% wins in most markets. That means losing 7 out of 10 trades. Psychologically, that's brutal. 2. More whipsaws. Price needs to move 3 times your stop distance. That's a lot. You'll constantly see trades hit 1 to 1, even 1 to 2, then reverse and stop you out. 3. Longer holding periods. To achieve 1 to 3, you often need to hold trades for extended periods, increasing exposure to overnight gaps and news. Let me be blunt. Most traders can't handle the emotional stress of losing 70% of their trades, even if they're profitable overall. You'll start second-guessing your system. You'll exit winners early. You'll sabotage yourself. When 1 to 3 works, the 1 to 3 ratio shines in. Strong trending markets, crypto bull runs, commodity trends, position trading, weeks to months, low frequency, high conviction setups, when trading with significant edge indicators, a 20% return with only 30% win rate. But you had to endure 70 losses. Can you handle that? So which ratio is the best? Here's the truth that might surprise you. It depends entirely on your trading style, market conditions, and psychological makeup. Choose 1 to 1. If you're a scalper or day trader, you trade range-bound or choppy markets, you need frequent wins for confidence, you can maintain a 55% plus win rate, you make many trades per day, choose 1 to 2. If you're a swing trader, you trade trending markets, you want the best balance of wins and reward, you're comfortable with 40 to 45% win rate, you value patience over frequency, this is the most versatile ratio, and my personal recommendation for most traders. Choose 1 to 3 if you're a position trader, you trade strong, clear trends, you have exceptional patience and discipline, you can psychologically handle 70% losses, you make fewer, high-conviction trades. Here's something crucial, your choice should also depend on your market. In Forex major pairs, 1 to 2 typically works best due to moderate volatility. In crypto during bull markets, 1 to 3 can be very effective. In range-bound stocks, 1 to 1 might be optimal. The hybrid approach. Many professional traders don't pick just one. They use a hybrid, take partial profits at 1 to 1. Move stop to break even, let the rest run to 1 to 2 or 1 to 3. This way you lock in wins, good for psychology, while still capturing bigger moves when they happen. The real secret. Here's what really matters. It's not just about the ratio, it's about consistency with whatever ratio you choose. A trader with a 1-to-1 ratio and 60% win rate will outperform a trader with a 1-to-3 ratio and 35% win rate if they execute consistently. The ratio is just a tool. Your edge comes from quality setups, strict risk management, emotional discipline, market understanding. You found this valuable? Smash that like button and subscribe for more trading education. Drop a comment below telling me which ratio you use and why. I read every single one. Thanks for watching, and I'll see you in the next one. Trade smart, manage your risk, and remember, consistency beats perfection.